Hey guys, welcome back to the channel, and today let's check out how to get a lower interest rate on Upstart loans in 2025. So interest rates on Upstart loans vary based on credit worthiness, income, and financial history. So here's how to secure the lowest possible rate on your loans. So let's get into it. Now, the first step is to improve your credit score before applying. So you can do that by paying off existing credit card balances to lower your credit utilization. You could also make on-time payments for bills, loans, and credit cards, and that's going to help you. Also, you can avoid opening new lines of credit right before applying for a loan. So you do that, and it's going to improve your credit score. And next you got to do is to choose a shorter loan term. So 3-year loans typically have lower interest rates than 5-year loans. So but while shorter terms have higher monthly payments, they do reduce the total interest paid. So if you want to get lower interest rate, you could try to choose a shorter loan term. Next, you can try to increase your income and show stability. So lenders prefer borrowers with steady jobs and growing income. So if possible, wait until after a raise or a new job before applying, and that's going to help you out. Also, you can try to reduce your debt to income ratio. You can do that by paying off or consolidating high interest debt before applying. You could also try to keep total debt payment below 40% of your monthly income. Also, you can try to apply with a co-signer if that's available. Upstart doesn't always allow co-signers, but if available, co-signer with excellent credit can help you to lower your interest rate. Another way to lower your interest rate is to consider Upstart's auto pay discount. So by enrolling in automatic payments, this can help you to reduce your APR by up to 0.5%. It also helps to avoid missed payments and late fees, which are great. So you want to make sure that you do that. You can also try to borrow only what you need. So smaller loan amounts often receive much better rates. So if you request too much, lenders may increase your APR, to offset the risk. So if you want a lower interest rate, you want to try to borrow smaller amounts. You can also check your loan rate first without affecting your credit. So you can use Upstart's pre-qualification tool to see your rate without impacting your credit scores. And if your rate is high, then you can work on credit improvements before officially applying. Another thing you can do is to apply when market interest rates are low. So interest rates fluctuate based on economic conditions. So if possible, apply when rates are trending low, because that's going to help you to secure a better terms. Final tip: if your loan offer has a high APR, you might want to consider waiting a few months to improve your financial standing before you go ahead and apply. That's pretty much it on the video, guys. Hope you guys liked it. Hope you found the information useful enough. If you did, like the video, comment down below, let me know what you thought. Share the video with your friends and subscribe to the channel if you haven't done so already, and I'll see you guys in the next one.